If you want awesome products at great prices, check out the description. UK house prices experienced their most significant monthly decline in over 2 years last month, a downturn attributed to weakened demand following the expiration of a tax break. Nationwide, Britain's largest building society reported a 0.8% drop in average house prices, bringing the figure down to £271,619 in June. This marks a sharp reversal from May's 0.4% increase and represents the steepest monthly fall since February 2023. The annual rate of growth also decelerated, slowing to 2.1% from May's 3.5%. This cooling market reflects a broader trend, with the property portal Rightmove independently reporting a 0.3% monthly price decrease in June, highlighting the increasingly challenging conditions for sellers navigating what's being described as the toughest buyer's market in a decade. The end of temporary stamp duty cuts in England and Northern Ireland in April undoubtedly contributed to this shift, adding considerable expense to many property transactions. Regional variations underscore the complexity of the market. Northern Ireland, while still experiencing growth, saw a significant slowdown, with annual house price growth dropping from 13.5% in the first quarter to 9.7% in the second. Scotland registered a 4.5% annual rise, Wales a 2.6% increase, and England a more modest 2.5%, down from 3.3% in the preceding quarter. East Anglia, meanwhile, recorded the lowest price rises at a mere 1%. The north-south divide, a persistent feature of the UK housing market, showed some narrowing during the second quarter. Average prices in northern England saw a 3.1% year-on-year increase, compared to a 2% rise in southern England. This suggests a possible shift in market dynamics, potentially driven by factors such as affordability and regional economic disparities. Nationwide's chief economist, Robert Gardner, commented on the softening price growth, suggesting it's a direct consequence of reduced demand following the April stamp duty increase. However, he expressed optimism for a summer rebound, citing supportive underlying conditions for potential buyers. These include a low unemployment rate, robust real-term earnings growth, strong household balance sheets, and the anticipation of further interest rate reductions by the Bank of England. Financial markets currently reflect a 76% probability of a quarter-point rate cut in August, with another reduction expected before year's end, possibly in November. This expectation of lower borrowing costs could reinvigorate the market and offset some of the current headwinds. A closer look at property types reveals further nuances. Terrace houses experienced the most significant price growth over the past year, with values up by 3.6%. Conversely, the growth in flat prices slowed considerably, to 0.3% from 2.3%. Semi-detached homes saw a 3% annual increase, and detached properties a 3.2% year-on-year rise. These variations highlight the diverse performance across different property segments within the broader market trend. The overall picture paints a complex narrative, a market experiencing a temporary slowdown after the end of fiscal incentives, but one underpinned by strong fundamentals that suggest potential for future growth, despite lingering global economic uncertainties. The coming months will be crucial in determining the extent of the recovery and the long-term trajectory of the UK housing market, a sector that continues to captivate the nation's attention. The interplay of economic factors, regional variations, and property type dynamics will continue to shape the evolving landscape of UK real estate. The ongoing narrative is one of both challenges and opportunities in a market characterized by persistent change and volatility. The impact of these shifting conditions on homeowners, buyers, and the broader economy remains a topic of considerable interest and ongoing scrutiny. The current climate underscores the importance of careful analysis and informed decision-making for all participants in this dynamic sector. The future direction of UK house prices remains a compelling storyline to follow.